Hello, everybody. My name is Joey from the Chart Guys here to check in on the markets as we've got a classic fear to FOMO V-shape underway, leaving many in the dust, including myself. So going to evaluate potential opportunities from here in varying degrees of strength or weakness that we could see from here. And on top of that, we've got the metals breaking out in a way that they haven't done in quite some time. So going to dig into the metals space and dissect opportunity over there as well. Let's get on into it with the S&P 500. So overall, we know we've still got rotation. Despite the fear last video, which was right at the bottom there, we knew we still had rotation because XLF and XLV were not seeing the fear downside that we were seeing in semiconductors and memory. Certainly semiconductors and memory pulled the market down, pulled QQQ down, SMH down, but the S&P 500 remained sideways in its range. And then as soon as we had some reprieve and temporary bottoms in semis and memory, then the market just V-shaped right back to new all-time highs. So last week was talking about how you've got to be watching the SPX levels as well because that was still holding support. And if we wanted to believe the bear break, we had to see SPX take it out as well. It did not, and now we're up to new all-time highs. So a little daily inside bar here to begin trading on Thursday as things stand now. And the next question will be, does hourly oversold mark daily higher lows? And that's going to be the question across everybody who has bounced during this period, because if hourly oversold marks your daily higher low, that is the strongest look. If it does not, then that could be potentially weekly lower highs shaping up on names that are looking for weekly lower highs. It could be the first little sign of it, or potential that we could just remain sideways or slinking down in places like semiconductors and memory. So hourly oversold going to be key everywhere next time we consolidate. The other key level for the S&P 500 is going to just be these previous all-time highs. Bulls want to hold those previous all-time highs next time we pull back to affirm the breakout that we are seeing right now. And daily 12 EMA also often a key level to hold. When we're seeing healthy moves, daily 12 EMA is support. So going to be looking for the potential of the same here. So moving on to the NASDAQ, certainly fear to FOMO as quick as possible, retracing over the 50% level of the pullback here, which increases our odds of a monthly bull flag. We didn't quite get to daily oversold, and we really weren't that extreme at the bottoms. We weren't even hourly oversold at the bottom here. So as I said last video, I am either waiting for more extremes or waiting for bulls to prove something. And I fumbled my opportunities at 4-hour higher lows. I didn't try this one because it was a Friday, and this one didn't quite meet my parameters. So as far as the NASDAQ goes, I got left in the dust, but no FOMO for me personally, because it really wouldn't surprise me if we kind of continue to work around in this range. If the NASDAQ is going to go right back to all-time highs, then we need to see weekly bounces across the board in semiconductors. So SMH itself has gotten its weekly bounce underway with the break of the high of the previous week. We're certainly looking for a weekly lower high as the most likely scenario, but much of the space within has not actually gotten weekly bounces underway, particularly our leaders. And I know SNDK and MU are more memory, but everybody's trading together right now. But SNDK, just a weekly inside bar despite getting a little dinky daily uptrend and now getting kind of smoked off on earnings, potential big old head and shoulders there for like a 2-day lower high off a 2-day 12 EMA. MU not yet confirming the daily uptrend, seeing resistance there, and now fixing for a gap down. So you've got to see these guys come along, get proper weekly bounces underway, while seeing MAGs and IGV stay at least flat or strong. And then that's when we're talking about the NASDAQ getting back to all-time highs. If we see continued weakness in semiconductors without MAGs going full-blown Hercules mode like it's done off of this low, I mean, that's really where the bulk of the upside is coming from in the NASDAQ. You've got MAGs going beast mode. You've got IGV seeing really solid strength, and we know that within QQQ you have SMH, MAGS, and IGV. So SMH, nice move off the low for sure from a percentage standpoint, but structurally it's a different beast compared to what we were seeing in the others. So ideal for QQQ is everybody comes back to life, and if that's the case, then we're probably looking at new all-time highs. If the SMH QQQ ratio does not turn around, and we've got a little sign of bearish divergence here. You know, when I'm talking about the ratios, often I say you need to see your ratio confirm the trend change that your underlying is seeing if you really want to believe it. Well, SMH certainly had a wicked day on Tuesday and pushed up even further into Wednesday, but it's not a good look for your ratio to not see that corresponding move. That's bearish ratio divergence. So I'm going to stick with the 2-day on SMH QQQ. That helped us know that SMH was falling out of favor back up from the highs. And for me, I'm going to allow it to let us know when SMH is coming back into favor. We're getting these 2-day EMAs crossing bearish for the first time since 2024. They went bull in May 2025. It's been all bull since then. Now they're crossing bear. It's a notable change to be watching out for. We've been riding weekly 12 EMA since 2025, and now that's been lost. So I know everybody's quick to want to get back into semiconductors and memory, but we just have to respect that right now they have kind of fallen out of favor objectively. Now, that doesn't mean you can't trade them and still get some nice moves, because if we're talking percentage moves, you got 26% on MU in a few days there. And even though some of these other names are stronger structurally in the intermediate term, you're not competing with those percentage levels. So it just kind of depends where you're at as a trader and what your interest is. But if you're looking to get swings on, you want to swing on a name that has a constructive ratio chart that will have greater odds of the swing actually going somewhere. So that's what we're looking at in the NASDAQ. Daily consolidation already underway here. If bears want to see follow through, they're going to need to confirm a 4-hour downtrend from here. Right now, we're just balancing below the 4-hour 12 EMA into the open, and hourly oversold going to be key when it comes into play, because that will tell us, okay, the NASDAQ is behaving in the strongest way that it could. So hourly oversold, not far from here. It's down around 29,300 as things stand. So if we get a push down into the open, that would hit. If we lose hourly oversold, or hourly oversold doesn't mark a daily high or low, then next levels we'll be looking down to, I'm going to be using price action levels within here. So this price action level, this previous resistance, potential to act as support, is right around with hourly oversold. And then for me, the next zone after that is going to be this area around 28.8, 28.6. And if bulls can hold that, then it would basically affirm this balance is still intact and just have this be a deviation out the low that ultimately did not get acceptance. So going to let the trends be the guide when there's not a clear, overwhelming, most likely scenario. I'd say bulls have the upper edge, but there's still a big question mark in memory, and that carries over to the Kospi. So of course, this has a big impact on semiconductors and memory, and there's potential here that we get a monthly high or low off the 12 EMA and we see a really solid bounce, but bulls need to prove something. So also probably going to be sticking with the 2-day here after our daily losing a little bit of clarity, but you want to see the Kospi come along to have confidence in SMH and DRAM, and in turn QQQ, and in turn the broad market as a whole. The S&P 500 has shown us that it can do it without QQQ, which is fantastic. But that's when we have our most confident moves, is when tech is leading. That's just how it's been historically. So on that note, in terms of who's been taking care of QQQ, We know it's been XLF and XLV. And the big question for me is if we get a bottom in, say, QQQ SPY ratio, sets a monthly high or low, and comes on back up, does that mean we get monthly lower highs on XLF SPY and XLV SPY? If it does, that's what broad market bulls want to see, because you want to see rotation. If you do not have rotation and everybody's going up at the same time, um, then that's when you exhaust yourself and you start to set up the potential for a blow off top. So as things stand now, just giving it the old eyeball treatment, looking at XLF and XLV SPY ratios, looks like they're coming down a little bit from these monthly 12 EMAs. We know we've been battling them for several weeks now and continuing to talk about this, but it's yet to resolve as QQQ SPY battles its monthly 12 EMA from the upside. So if you see the flip, then you want to make sure you're aware of it, because folks who have fared well during the tech drawdown is largely because they were either cash or they were focusing on healthcare and memory. So keeping eyes on these ratios and SMH QQQ, of course, as well. We're looking for a monthly high or low and going to be watching that 2-day as a guide within there. So XLF, even though that ratio is starting to come down, XLF itself is just fine. It's just riding daily 12 EMA, daily uptrend, so not going to get cute or fancy with it. Our key level right now is 56.18, and that is that. Let's see where we're fixing to shape up pre-market. So we got lower opens in semiconductors and memory and tech, and we've got higher open in XLF. So that continued yin and yang relationship is playing on out, and you can really see it on these ratio charts. We'll go back to those real quick. When we look at the 29th, so 29th is the bottom on QQQ SPY ratio. 29th is the bottom on SMH SPY ratio. 29th is the top on XLF SPY. 29th is the top on XLV SPY. So it's just the torch getting passed around. So bulls like to see that, and it will be notable if that stops, which Tuesday it did stop briefly. That massive bull day. We had XLF going up. We had MAGs, IGV, SMH, memory, all going up. Of course, QQQ with that. The only one that wasn't participating was XLV. And you can see how much heat that puts on the market when you have everybody doing the same thing. It was just a pretty remarkable bull day. So certainly always keeping eyes on rotation, because one, it tells us where to be looking, and more importantly, just tells us which way the wind is blowing for whatever we're looking at. If we're trying to sail our sailboat straight into the wind, it's going to be difficult. And that's why I'm talking about wanting to see proof on SMH QQQ personally, to have interest back in those names. So looking at XLV itself, still kind of just balancing out at the highs here, a little bit of a higher high. Bears unable to confirm a daily downtrend to get weekly consolidation underway to follow the ratio. But at this point, it is still a weekly bull flag confirmed without follow through. So kind of got to be watching this little bit of a rising wedge psychology. And if we were to break 160.73, that would increase the odds of monthly consolidation coming up from here. So not much going on for healthcare at the moment. So IGV, bears unable to confirm a weekly downtrend, and now we're back up to the highs here. So do got to be mindful for the potential of, whatever time frame it looks okay on, some type of tightening range here. It really wouldn't surprise me, but for now, bulls are in full control here. Daily consolidation fixing to get underway here with a gap down. We'll be watching hourly oversold, which is not far away, around 97 at the moment. And if that holds, then that's a really strong look for bulls. If that's lost, then we're looking back to this previous resistance and daily 12 EMA for a potential higher low. If those are lost, that's when we're talking about the full-blown range-bound situation here. So looking at MAGs, so MAGs doing a lot of the heavy lifting off of the lows as some old faithful names that it's almost been easy to forget about with what semiconductors and memory have been doing. Amazon, remarkable response to earnings brought the market up a bunch. NVDA, which obviously is a semiconductor company, but as I've been talking about in these videos, it's trading a lot more like MAGs than it is like SMH. So relative strength there, doing some heavy lifting. Google, after getting bogged on its earnings, bouncing from, drum roll please, monthly 12 EMA on a monthly 12 EMA rider. Nice little daily stair step out of there. Some bearish news there on Wednesday. So we'll see, can bulls hold these daily EMAs and set a healthy daily high or low, or are we going to lose those and then kind of be looking at some type of a megaphone type action there? So yeah, mags have been doing some heavy lifting for sure, and we'll look to see, can hourly oversold market daily high or low in mags. Got to be mindful of this rising wedge as well, even if we do go to higher highs. Let's see. So the 30-year, we did end up getting that lack of follow through, talked about last video, noting that many of these higher highs up in here are not seeing follow through. We haven't seen the follow through yet, but it's bears haven't really come back yet, bears on this chart. So continuing to keep eyes on that. And what else we got? So yeah, I guess to address the teaser in the video or whatever. So where do you go now if you were left in the dust? So I would have liked some QQQ or some NQ exposure for a swing personally. But like I said last video, either need to get more extreme or I'll get in after bulls show up. So I don't have any QQQ, and I'm going to take a reactive approach personally. So whether we bounce from hourly oversold or here or come back all the way down, I don't really feel I have much edge with that. So I'm going to let bears do their thing off of the top right now and look to be taking shots essentially when we can, assuming the 4-hour trend actually gets compromised. I mean, you could say it was a little bit with a 4-hour bull flag confirmed, no follow through. I guess we'll go with that since daily consolidation is underway now. But yeah, I'm just going to want to see a 4-hour bounce big enough to create a higher low and then do that. And if it happens from here, then I'll look there to potentially add a swing on. If we end up getting a 4-hour downtrend and then something like this, I'll look for this on a right shoulder of a head and shoulders. Or if we get a falling wedge, you can't necessarily just pick where you want to enter. I mean, you can know your areas of interest, but this is where the task and tool concept is so helpful, because I don't know what we're going to get from here. And if we just see say punishing downside and we get like true fear coming back into tech, which of course there's zero sign of that, but just saying like, maybe this is a flash in the pan V shape, lulling everybody back in to say that the show goes on, and then we see a weekly bear flag in SMH, and then tech is working its way back down to these lows. I certainly don't want to be just like scaling in from all the way up here or something. I will prefer to take a reactive approach, essentially do what I tried to do in here, but did not pull off because it didn't meet my entry parameters. So you can be doing that on any name that you're interested in, and basically just saying, okay, we need to see a daily high or low, and that's where I'm interested in the most aggressive scenario. Or if you want to be more patient, then you're looking for a weekly high or low. And if you want to be really aggressive and go for some of the stinkers, you can be doing something like REMX that is well smoked off of its highs, 42%, and then getting over daily 12 EMA for the first time in a long time. You can say, all right, I'm trying for a daily high or low here, and that's either going to be the start of a monthly bounce, or I'm wrong, RKLB, something similar. So this is not personally my style, but I respect that some people are into that stuff. So you got opportunities there. Let's see, AVGO, been talking about in these videos a fair amount, and it ended up working out pretty much as prescribed, of potential that if we get this weakness in SMH, that because AVGO already paid what it owed, that it can just remain sideways, and then a bottom fish of AVGO ends up being a lot easier and nicer play than trying to pick bottoms out of thin air on the sexier semiconductors and memory names. So at this point, 15% off the bottom, not as big of gains as MU, but you have a defined stop and it's a much easier entry to make. So continuing to watch AVGO, see if it can follow through on that monthly higher low being set. Tesla's still weak, just really not much to say there, but I suppose it fits into the category of RKLB and REMX, and uranium in there as well, where it's names that have been smoked off the top for a while. And if you want to say, okay, we're just going to return to the status quo of up only in the markets, and I'm looking to get these beat down names, see if they can get some bounces, can be looking for that. But for me, yeah, you probably just want to see this ratio come alive. The Tesla QQQ ratio, bulls are hoping that they can defend support down here. Maybe a move over 4-hour 12 EMA. And we've already had that. I guess it'd be 12-hour 12 EMA would be for the most aggressive to say, okay, I'll try some Tesla down here. So SpaceX, keep an eyes on it, but not keep an eyes on it just so I don't forget about it, but not interested in a super overvalued all-time low name personally. Like I have said before, I think, whether it's here or another 50% lower, typically how these things go is you'll get some type of sloppy base that ends up forming over a long period of time, and then a move like that. And this is where I'll be interested in SPCX or the back test. And this is where I'll be interested in SPCX. So that's my style personally. It, not being so aggressive on the dumps is what kept me from getting a QQQ position for this bounce. But it's also what keeps me from wasting my time messing around with stuff that is not really yielding opportunity. So I'd rather lose a bit of perceived value off of the bottom for a massive increase in expected value in my operations. And that's just where I like to stay focused. So on that note, let's move on to metals. I think that's it for the broad market, right? RTY weekly 12 EMA bounce, just in a nice weekly 12 EMA rider back to all-time highs. If we get consolidation here, potential cup and handle. So small caps doing well. And yeah, let's move on to metals. So I've talked about this thesis thoroughly in the videos here, and it's playing on out. So 2 weeks ago, I think the video was metals time to shine, and then the week before that was the presentation of the thesis, I believe, and the dominoes are continuing to fall in the metals space. So we got the gold ES ratio getting over daily 12 EMA. That signified that, okay, it's time to focus on metals again. That's what led me to take my GDX entry. I'm playing it via NUGT, but this was the day, the 21st of July, that the gold ES ratio pushed over daily 12 EMA. So I was live streaming this morning, took the entry right on the open, and that's obviously going very well now. But you had your bullish ratio divergence as well with GDX GLD ratio holding the lows while GDX pushed lower. Now, on that note, it's been a nice move. I know people are already feeling some FOMO. If the GDX GLD ratio rejects from the highs up here as has been the status quo, then that will be GDX pulling down itself. If we go ahead and plot GDX on this ratio itself, you can see that the peaks and troughs of GDX align with this ratio. So we've got a bit more clarity on the ratio than GDX itself, but keep an eyes out there, and loving to see what we're seeing in the metal space. So you can go back and watch those videos and watch how the dominoes fell progressively. And then we had a really nice clue this week with platinum breaking out of its 4-hour tightening range. And this is something that you will see in the metal space a lot, where, let me see here, pull over a tweet. So this is from July 30th, talking about opportunity will be coming into platinum when the daily range breaks. And, that's just such a classic TA thing. When you get the constricting ranges and when it breaks, you anticipate volatility to come in. But then the break comes, you get the big time follow through, and this is a 5-minute chart. Absolutely went on a tear. But the key here is not purely this platinum move. I mean, it was able to be foreshadowed for sure, just because of the general strength coming into the space with the ratio positives there, and then the tightening range, is very possible to be ready for this. But even if you weren't, moves like this tend to bleed through the space. Eyes on silver, gold, and miners. Silver and gold were still sideways at that time. And if we look at silver now, it's broken out of its range, nice follow through, and gold, of course, broken out of its range, nice follow through. These were still within their tightening ranges when platinum broke out and did its thing. So you will see this again and again and again in the metal space, and you need to burn it into your memory. Even if you don't trade platinum, even if you don't trade palladium, these things are important to watch because they shift odds within the space. And if one of those break out, then you can say, okay, well, I'm going to take a hourly higher low in gold and see if it can follow, or an hourly higher low in silver. GDX was actually early to break out as well, getting the initial break on Tuesday, which is when platinum breaking on Tuesday as well. So those two broke in unison there. But definitely got to keep eyes on that. Also, just kind of a general mindset thing, looking at silver here. This was my post on August 3rd, where you've got silver coming down to support in extreme short-term conditions. And it's important to not let our thoughts guide or our emotions guide what we're doing when we're trading, because we want to be thinking in terms of risk to reward. So why would I even be looking at silver at this moment? Because it's just balancing down at the lows. It's because we've got our ratio coming off of the lows. It's because we saw GDX make a nice move off the lows. That tells you that it's time to focus on these things, and then you look for proper risk to reward opportunity. And to bring this tweet back, like at the time of the post, it looks awful, but it's just not about that. You don't want to think about that so much. So we come on down, you get the initial hold, it follows through even more, comes all the way up, and that's how you can birth a low risk swing position, or just a nice day trade, however you end up going about it. But obviously it's followed through in a big way. So where do we go from here? It's going to be a similar deal for metals that we're talking about with the tech sector. There's going to be varying degrees of strength for higher lows. If gold stays strong and is going to keep the pedal to the metal, it's going to hold 4-hour 12 EMA. So I love EMA riders in the metal space. It's my preferred way to play them. So it's just going to be all about the EMA. Strongest look is going to be holding 4-hour 12 EMA. Next strongest look would be holding daily 12 EMA. Our daily EMAs are crossing bullish, and in my opinion, a really nice opportunity for a long would be if something like this shaped on up, where we could come back and basically have a back test of fresh bull cross EMAs. So the drawing doesn't look so good right now, but this is the same concept of what we were talking about with the XBI SPY ratio on the monthly earlier in the vids. So you've got that opportunity on gold. You've got that opportunity likely coming up on GDX, because we're getting our bull crosses on these EMAs. Because of the size of the move, it's gone so steep that it's a little tough to draw these EMAs. I'd imagine we start to slow down the magnitude, but getting a back test on that and go would be the strongest look for bulls, in my opinion. So something that is really nice for the space is that we got over weekly 12 EMA on GDX, which that increases the odds that gold can do the same, we're testing right now, and that silver can do the same. Because the bear case is saying, okay, weekly EMAs cross bearish for the first time in eons, and so what? This is just a weekly bounce. and we're going to reject EMAs and continue this sentiment shift that we had off of the highs. So that's the bear case. But just as we talk about these 4-hour ranges breaking and popping one at a time, I imagine these 4-hour or weekly 12 EMAs will pop one at a time. You got platinum pushing on through, gold's testing it a little bit. You've got palladium already up and through. So these things bleed through the space, and you look for them to continue to bleed through the space. So first it's the breakout, now it's the weekly EMAs, then it's going to be monthly bounces, and you just go one at a time. So, and that can be used to help scout daily higher lows. If we're pulling back and say silver starts to really base out and it's not going lower while gold's pushing lower, then that can be a sign to have some interest in the space. And yeah, it's pretty much, if you go back on my Twitter, which if you're not following me on Twitter, you should be, junglefunk_. But back, I think it was July 12th was where I initially laid out the bull thesis there of these are the things that we want to see. And at this point, they've all happened except for silver breaking out of its falling wedge. So silver still has more work to do in that regard, but everything else has fallen into place, including the XAU-XAG ratio, which little bit of a red flag here today, objectively. So I hadn't seen that yet. So part of the thesis is a rejection from monthly resistance and monthly 12 EMA on the gold-silver ratio, because when this ratio is going down, that's when the space is going up. And we needed to break this double bottom to see weekly consolidation follow through, and then had to take out weekly 12 EMA. It can still certainly happen from here, but the ratio bull thesis and metals bear thesis is kind of similar, just with these weekly EMAs. Ratio bulls and metal bears, those are synonymous. They say, well, we've been cross bear on these EMAs forever. Now we've crossed bull. We're going to land the back test and then keep on going and get a quarterly bounce underway on the ratio chart. So got to keep eyes on that. If ratio bulls reconfirm a daily uptrend from here, that will be a red flag for the overall thesis, but we'll continue to just trust the price levels of the names that we're trading as our guides within here. So I wouldn't be surprised with some short-term cool-off in the space. You got gold testing weekly 12 EMA. You got the GDX GLD ratio up in firm resistance / lower high zone. You've got XAU XAG bouncing from weekly 12 EMA. So we'll take it one step at a time, but just don't feel any FOMO. Determine how aggressive do you want to be if you're not in any positions. If you want to be more aggressive, you're looking at 4-hour higher lows. If you want to be more patient, you're looking at daily higher lows. Potentially playing off the previous resistance, hoping to have it act as support. On gold, previous resistance, hoping to have it act as support. This value area high that was key in helping label out this base, to be playing off of that. So do you want to be aggressive? Do you want to be conservative? Do you want to take an aggressive shot and stop out and then take the more conservative shot when that comes around? You can do any combo of these things. You just don't want to FOMO in at the top because NUGT is up 40% off the lows or whatever. You're not going to let me measure? Yeah, 44%. Really nice move. And other things that you can do is you can find short-term opportunities. So yesterday in the chart guys room, we had a 15, I was viewing it on the 15-minute at the time. It was right when we were breaking this support, and because this lower low here didn't see follow through and then we bounced up, that's what tells me in my mind, all right, be aware of the potential of a falling wedge, because this chart just showed us its character. We know we've been really extended. We hit historic hourly overbought, and hourly consolidation is now underway, but this could just be an hourly bull flag if these lower lows don't see follow through. So this is right on the break. If this lower low lacks follow through, potential 5 or 15-minute falling wedge for an hourly higher low. So you can take opportunities like this to try to hop on the train. And what are the chances that this level is never breached again before we see a quarterly high or low? I'd say it's smaller, on the smaller side of things. I wouldn't have super high confidence that this can be a swing position that plays on forever, but you get in, you take some partial profits, you put your stop below the low, and then you let the market do what it's going to do. We're never going to know if something's going to be a bottom that's not revisited or whatever, because just as much as it wouldn't be surprising to see some bulls or bears show up in the space, it wouldn't be surprising to see us just continue to V-shape. You can't be surprised by anything in the markets. You've got to just lay out your different scenarios. This is most bullish, this is mid-tier bullish, this is mid-tier bearish, this is most bearish. Have your 4 different scenarios laid out, have a game plan for each of them, and ideally try to get some skin in the game for each of them. If you have a proper setup, this hourly higher low, where'd oh, I turned it off. I was like, where'd our stuff go? Just trying to confirm where it is. This hourly higher low, it's definitely dinky and kind of difficult to get, especially when you're an hourly 12 EMA rider. Let me turn off the 24-hour, makes that a little bit clearer. Oh, is that what I wanted? Why are we? Yeah, this was kind of difficult to get if you're just looking at the hourly. I would be thinking, maybe 5-minute oversold, hourly 12 EMA on this rider, something like that. But then the market presents the opportunity. You say, oh, I know that. I know this fall. I know falling wedges. I play falling wedges. And then you just do that and then see what happens. And maybe you're blessed and can hold it on. Maybe you stop out and you lose nothing. It's no big deal either way. All right, let's keep the show on the road here. Not much else to say. So oil, looking for a weekly higher low. So weekly lower high, most likely scenario, played on out. Now we're looking for a weekly higher low. Daily downtrend guide, room for a daily lower high. And I'm just viewing this as high, low, lower high, lower low. I'm not minding myself with those little wicks within there. And Bitcoin is just hanging out. We had our weekly lower high set off the 12 EMA, rejecting from here. And if we confirm a weekly uptrend, be looking to potential wedge resistance, kind of keeping eyes on this pattern. So you all know I've been dogging Bitcoin for a long time now. And if I'm going to stop dogging Bitcoin, then the Bitcoin QQQ ratio needs to get over a weekly 12 EMA. We've been a weekly 12 EMA rider for months and months. And if we get up and over, then that will tell us, okay, we've got a shift here and it's now worth focusing on Bitcoin. So I'm certainly keeping eyes on it, and I'm open to shifting my views and beliefs about something once I begin to see something different. I was very openly bearish on metals for a long time, and it's actually, it's kind of funny in the chart guys room. We have a channels for everything, and I do a weekend commodities video, and it was actually like a realization in the moment doing that video, because every week I was just like, metals are trash, bears are in control, you gotta wait. And then when that thesis kind of popped out to me, I was like, oh, well, I might have to change my tune, because this is a bullish thesis beginning to play on out. So I'm open to doing the same on Bitcoin if a bullish thesis can present itself. So, another cool thing about the chart guys, like, this NUGT play is taken live on stream. So a lot of folks benefiting from that. So if you are looking for a community to trade, definitely check out the chart guys. We've got a lot of stuff. You got the room, you got the swing report. If you don't have as much time to do stuff, Lamont heads this off. This is the dashboard from back in January and February. And it's a full report, and you get 2 names each week with buy zones, stop zones, targets, all of that. But yeah, Lamont's the smartest guy on the chart guys team, and he heads that off and does a really good job. So all this stuff is on the chart guys website, and check it out if you got any interest. So yeah, Bitcoin all about weekly lower high resistance. If that can break, then we say, Is the ratio following along? If the ratio follows along, then let's take a little bit of a look. But until then, it just is what it is. And yeah, that's all I've got to say. Hope everybody has a wonderful Thursday. If you can like this video, I'd appreciate it. The pre-market posting time is not good for the algo, but sometimes it's difficult navigating the time zone difference here from Thailand. So I would appreciate it if you can do that. And I will see you all next week.